AMC stock purely on a technical basis looks primed and ready for a rally, and there's multiple indicators in which we're going to talk about purely due to the technicals, but it goes much deeper than that because you cannot base a rally off of technicals. 9 times out of 10 that is a failing strategy, but in this case over the next week or two there's actually a lot of data here that supports AMC and this rally theory. So we're going to get into exactly what this data is, where it could send AMC stock, everything you guys need to know. So today is Sunday, tomorrow is Monday. Typically we would be open for trading tomorrow, but the stock market will be closed. So let's get into all this information, guys. So AMC stock, first we should preface with the small rally that we have already seen. And by a small rally, it's all relative, right? In the grand scope of where AMC was to where it is now, where the low was and where it is now. It's a decent rally percentage gain wise, but it's a small rally overall. Like as a percentage basis, rallying from $3.77 to where we currently sit at $5.10 per share, you're up like 80% from the low. So it's been a good rally if you were buying as the stock was cratering. A lot of people do not do that. Some people do. If you watch this channel, you probably do, because 52-week lows subsequently have always been followed by a rally in AMC to this same extent, if not larger. And I do think this one could really get large and much larger, especially on a percentage gain basis than what you have been used to seeing in 2022. So we're going to break down the technicals later on into this video, but I really want to talk about this next upcoming week and the data here that supports it. So we got to get into obviously the Ortex data, because just simply put, the short interest, the cost to borrow rates, as far as the option activity as well, they have never looked better for AMC, at least over the last year or two. Yes, year or two. AMC's live short interest of free float is sitting at 22.24%. You have not been over 22% since June of 2021, the last time we went through a major rally. So just on that preference, you're primed for a rally. There is a lot at stake for shorts, and there's a lot of shorts in AMC that have a lot to lose shorting the stock, especially at these very depressed levels. It's a different story shorting AMC at $20, $30, $40 if you're trying to do this on a fundamental level. But when you're shorting the stock at $3, $4, $5, $6, $7, $8 a share, it doesn't make a lot of sense, right? Your risk to reward ratio is way out of balance at those prices. So you're sitting on the highest short interest levels that we have almost seen in 2 years. Now, live short interest of free float has us at about 115 million shares that are currently sold short. Just on Friday alone, the short interest went up 0.71%, and the amount of shares sold short went up 806,000 shares. Now, the cost to borrow rates have also been super high, and that's been another big thing with AMC that really just continues to stay elevated. Interactive Brokers short availability has the cost of borrow rate at 103%, with 150,000 shares available to be traded as of Friday. That was the last reported numbers that we did get. So Interactive Brokers is giving us 103% cost of borrow rates. That is extremely higher. That's higher than something like Bed Bath & Beyond that just seen their share price rally in the hundreds of percents. AMC, is going to have that squeeze factor on shorts a little bit harder, because all of a sudden, if you took on a short position 2 months ago at 20% cost of borrow rates, well, now they're over 100%. So that's going to put a lot of pressure on you. Your monthly payments or yearly payments, however it's broken down, different trades are going to be different. That payment amount is going up a lot, and especially if you have millions of dollars in a short position, you're talking, $50,000, $100,000. It's hard to tell, but the numbers have dramatically increased, and you can see that's just Interactive Brokers. the cost of borrow average of 90%, cost of borrow max of 345%, and the cost of borrow minimum of negative 0.5%, which is almost laughable, just to see that compared to what Interactive Brokers is telling us, guys. So on a shorts kind of basis, you're 100% vulnerable for some degree of a short squeeze. But a short squeeze isn't even like the base case for this rally. That's just, hey, it could be an added benefit. I think something that is a lot stronger in my bull thesis is the option activity. So for next week, January 20th, this is going to be the biggest option expiration that we have almost ever seen for AMC stock, besides when everyone was buying options back in June of 2021, right? In January of 2021, when the stock really went parabolic. This is the most option activity you've seen since that time. 44,000 calls that are in the money for January 20th. That is going to be this Friday. 439,000 calls that are out of the money. This is 44 million shares worth of options that may or may not be hedged for, depending on what happens with the price of AMC. And then get it, on the put side, you just haven't seen these numbers. The puts, 139,000 puts that are in the money. These are puts that have already been hedged for. And the way that market makers hedge out puts is they short stock on the open markets. Well, if those puts are no longer in the money because the stock is moving up, hedge funds, market makers, whoever is hedging out these strategies, right, have to go out and buy shares of AMC on the open market because they no longer need to hedge out these options. And that, again, is more buying pressure. And this total amount, 139,000 puts that are in the money, equates to almost 14 million shares that are sold short, that are currently sold short. Just in a, could be a day-to-day fluctuation, right? It typically is, depending on what calls or puts go into the money or out of the money. But especially on the put side, when you're seeing this many puts in the money, you have likely already seen about 14 million shares sold short by the market makers. And this is not going to show up in the estimated short interest of free float. This is not going to show up in the FINRA data that we get released, the DTCC. This ain't going to show up because it's so liquid, right? It goes back and forth depending on what happens with the day-to-day basis in the option market and with the price of AMC. So I think you're really setting up for a lot of potential buying pressure when you're talking 44 million shares plus 14 million shares. What is that? 58 million shares that potentially could be bought by the market makers. I think just the puts going out of the money will be key as well, because that's already showing you shares that have been sold short by the market makers or by hedge funds, by money managers. You get the idea there. Now, if we take a look at the option activity for January 20th to actually see where a lot of this hedging or buying from market makers would actually take place, aka that gamma squeeze, we could see on the call side, you have a lot of open interest that did go into the money over the last couple of days, because on Friday the stock did go up 0.80% and went up 1.78% in after hours. This might be even a foreshadowing of what's to come next week. I don't know why this chart is bugging out a little bit, honest, but we'll just fix that. But as far as to the upside now, at the 550 strike, you have 8,400 for open interest, 16,000 for open interest at the $6 strike, 3,000 for open interest at the 650, 18,000 for open interest at the 7, 2,300 for open interest at the 750, and 10,000 for open interest at the $8 strike. Now, what about the put side? So what we're seeing for puts that are currently in the money: 3,000 at the 550 strike, 15,000 at the $6 strike, about 1,000 at the 650, 13,000 at the 7. 750 has like 100. This is a brand new strike. At the $8 strike, you do have 12,000, almost 13,000 for open interest as well. Now, when you get to that $15 strike. That's where things get very interesting because these numbers are very high just overall. But once you get to the $15 strike, you have calls that are out of the money, obviously, for open interest. 50,000 calls at the $15 strike. At the $15 put, you have 40,000 for open interest. So if the stock does start to make this move in this next upcoming week, then you could potentially see the stock, in my opinion, have a 15 handle on it. I think the stock could go roughly to those prices. Obviously, you're going to see a lot of back and forth once you get close to a large strike with a lot of open interest. But you're talking 9 million shares that would potentially have to be bought by the market makers at the $15 level. So typically when we have seen this in the past, you'll see a lot of rejection, a lot of resistance around these major levels. And we don't always close above that. Obviously, if we do close above that this time around, you're probably talking to MOAS, right? You're probably talking an imminent short squeeze to the hundreds of dollars, right? That's always going to be a possibility. But even in that $14 to $15 range, that's where this rally could take a little bit of a breather. And that would be about a 300% gain on the week. Now, obviously, I am not a financial advisor. I'm not a financial planner. Your guy is studying for his Series 6 and Series 7, hopefully shortly after that, to become a financial advisor, to be able to invest people's money. But I am not that as of right now. And even if I was both of those things, I cannot give you personalized financial advice. But simply put here, to make it all make sense, the numbers alone for the option activity, not even to mention the short interest, are compelling, and you can make a full-on bullish case about this next upcoming week based off of that alone. Now, if we take a look at the technicals on AMC, lots of bullish indicators. You're seeing a price crosses the moving average, right? That's a very bullish indicator, obviously. Williams percentage R, fast stochastic, FSTO bullish indicator, momentum indicator, and a short-term KST indicator as well, whereas the RSI is still only at a neutral level, and the MACD has gotten a lot more bullish over the last couple of trading days as the stock has been, making a move off of the low, and it looks baby-like in comparison to what we have seen in the past with AMC. But typically when you get this many bullish indicators, you will start to see a rally to the upside. Last time this happened was in November when the price of AMC did go from about $5 per share all the way up to about $9 per share. And that was not even close to the amount of option activity that we're seeing or the amount of short interest that we are seeing. So I think this could get pretty big, and I think we're in the very early innings of this. So from my perspective, this is where, if you resonate with some of this information and you've been around, especially in this trade for a while, you obviously can resonate with this. You see the option activity, you see the short interest, you see the technicals. It's not hard to see. You would literally have to be blind to say there's no possibility AMC continues to rally from here. Like, that's the honest truth. But from my perspective, you guys, at this point, if you want to trade this or try to take advantage of this or try to make money off of this, you have to formulate your plan now. You have to come up with your risk to reward strategy, right? You don't want to risk it all on this potential rally. You don't want to not have any exposure to it, in my personal opinion. Obviously, I'm not a financial advisor. Do what you guys are going to do. But this is the time to start planning for this, especially when the markets are going to be closed tomorrow as well. So that is it, guys. If you want access to all of my trades in real time, especially when I do make trades on AMC, link down below in the description of this video. Thank you for watching, and I will see you in the next one.